down about 80-odd points for the Nifty. The sensex is down about 300 points.
Benchmark indices are down close to about 0.6, 0.8% gone on Nifty as well as sensex.
Weekday in trade, and mid-caps, they are the ones which are underperforming the benchmarks as well.
The low today, by the way, was 17,993. We had highlighted 18,000 as a strong support. So almost got there, 83 points higher, 18,200. So we're going to leave off practically at the day's highest point.
We left at the day's highest point, and what a stellar recovery the market showed in the last hour. It was December series expiry, the last F&O series of 2022. And while the series belonged to the Bears, the last day definitely, and the last week belonged to the Bulls for sure. We opened lower, and thereafter we saw a near 200-point recovery from the lows on the Nifty. Hello and welcome. You're watching us here on Markets Today. This is a show where we track 6 hours of trade in 5 headlines. Let's talk about those headlines. Indian indices stage a dramatic recovery in the last hour to end with gains. Bank stocks lead the charge with the Nifty Bank gaining 800 points from the lows. Mid-caps underperform while the market breadth improves, remains neutral. Reliance chairman Mukesh Ambani lays out targets for various businesses in his annual address, wants Jio to connect the globe, Reliance Retail to reach all Indians, and the new energy business to transform the world. There was litigation reprieve for Dr. Reddy's. It gained in trade, closed just above the flat line. The company says all claims against it pertaining to the Revlimid generic have been withdrawn. SBI chairman tells CNBC-TV18 that credit growth won't be impacted by rising interest rates given strong demand and a likely peaking of inflation, adds that the comeback of contact services is a big driver. And in stocks making news, Shriram Finance slides 5% after 17.5 crore shares list post-merger, causing excess supply. Spandana Spurti gains on selling bad assets, whereas sources say Bharti Airtel is looking to list its Airtel Payments Bank. Market stage a sharp recovery on expiry date to end in the green, and how a near 200-point recovery for the Nifty, over 800 points for the Nifty Bank, the sensex closing over 61,100. So let's take note of the market itself. For the December series, we saw a cut of over 1% for the frontline indices. The mid-caps and the banks outperformed to end with gains. Prashant Nair joins in with the granular details.
A solid pullback from the day's lowest point, and it looked dramatically different by close. It's compared to the bulk of the session. Most of the move came in the last 60 minutes of trade. It was also, of course, futures and options expiry. The Nifty doing very well, ending practically at the high point of the day. The surge was powerful. Banks even better, and the Bank Nifty intraday sharp spike in the last 60 minutes was something to be seen. Broader market pullback, but the pullback as compared to the Nifty or the Bank Nifty was a little more feeble, but they ended higher. Large cap gainers included names like Bharti, iShares, State Bank of India. Nothing outsized, I mean, in terms of day-on-day returns, but there was a broader push higher that we saw. In the broader market, I mean, the action was action also actually changed in the last 1 hour. It was negative advanced market breadth when we started at 230 in the last hour, and it flipped to slightly marginally positive advanced decline by close. The Adani Group stocks on your screen all rallying. Names like Fact, Sharda Crop Chemicals, recent listings like Nykaa, BKG, Inox Green doing very well. KEC, AG's Chemicals, Skipper, BEML were some of the names which stood out. There were losses as well, but what went up, and that list of stocks which went up was a lot longer, and it went up with volumes, and I think that's what matters. Shriram Finance was lower, Shree Cements, Amara Raja, Kalyan Jewelers, Saregama were some of the other stocks which actually ended lower. Tomorrow, of course, is the last trading session for 2022, and it in a way has been uncharacteristically alive, the market. I mean, you know, while volumes have been lower, and that's to be expected, but price action has not been dull. The Nifty now sits exactly at an important rising trend line all the way from the lows of June, which is at about 18,200. A clear break above this level, I think, opens room for more upsides. Back to you.
Let's move on to some market opinion. The focus is more on the liability side than the asset side. That's the word coming in from Nilesh Shah, Managing Director at Kotak Mahindra Asset Management, talking about the banking sector. In fact, he spoke with us on a whole host of topics, and with the markets, he believed that there could be a revival of EBITDA margins in the next couple of quarters. Let's listen in.
The overall liquidity in banking system at the beginning of the year on 1st April, it was about 8 lakh crore. And then over a period of time, it kept on dwindling at about 2 lakh crore. Now, clearly, when liquidity becomes scarcer, then obviously there will be scramble for deposits, there will be higher interest rates. So my feeling is that right now, from asset side, market will focus on the liability side of the bank. Banks with better franchisee, better ability to raise deposits at a lower cost will do well. This year, the gap between return of equity fund and a debt fund will be fairly narrower. COVID impacted EBITDA margins. Clearly, there was a hit on inflation and there was effect of slowdown at the bottom end of consumption. Our feeling is that in December 22 quarter, the hit taken thanks to the stock correction coming in will be over, but the volume growth is something which we will be critically watching. Clearly, the market is discounting rebound in the EBITDA margins to June 22 quarter level rather than sustenance of September 22 EBITDA margin levels.
Right, so that was some opinion coming in from Nilesh Shah. Let's also stick with market opinion. Cameron Brandt of EPR Park Global says that the market is in uncertain space about growth in the first quarter of the coming calendar year. He also believes that emerging markets will continue to see strong flows.
Considerable uncertainty about where we're going on a broad front, certainly into the first quarter of next year. We obviously seeing, as we nearly always do, a certain amount of sort of window dressing, tactical position, year-end positioning, which has actually been to India's benefit. Your stock market is one of the few that looks set to end the year with a net gain, and we've been seeing some money move to take advantage of that. In the emerging market space, we're continuing to see a willingness to look past the COVID turmoil in China to the rebound that people are hoping for. So strong flows there.
Let's talk about the second headline now. Speaking at the Reliance Family Day, Chairman Mukesh Ambani laid out targets for each of the conglomerate's businesses. He assured that Jio's 5G rollout will be complete by 2023, and with the addition of new energy arm, Reliance is on the path to become India's greenest corporate. Listen in.
5G network across India at a pace which is faster than anywhere in the world. Jio's 5G deployment will be complete in 2023. Since every single village will have 5G connectivity, India has a historic opportunity to completely erase the rural-urban divide. Like Jio, the growth of our retail business will also have a cascading effect on India's inclusive development. All of us are excited about the media and entertainment business and its integration with digital services that will reinvent the entertainment industry completely. We are making rapid progress in getting our gigafactories in Jamnagar ready. From being India's largest and most valuable corporate, Reliance is now well on its way to also become India's greenest corporate. 2023 will also be a year of renewal and revitalization for Reliance Foundation.
On its way to becoming India's greenest corporate. So that's the big headline coming in from Mukesh Ambani's speech at the Reliance Family Day. Let's talk about the third headline then. Dr. Reddy's opened higher today after it said that all the claims against it pertaining to the Revlimid generic were withdrawn. However, the stock ended flat. Remember, the company, along with innovators like Celgene and BMS, were accused of restraining competition. Sonia Shenoy standing by with the details.
Well, thanks a lot for that. It's a positive development coming in for Dr. Reddy's. As you rightly pointed out, they have mentioned that all the claims with regards to Revlimid generic complaint has now been dismissed. Revlimid generic had been named a defendant along with Celgene, BMS and several other generic companies. And now the company says that the Revlimid generic complaint defendants has been improperly restraining competition, and they've maintained a shared monopoly in the sale and the brand. Now, the plaintiffs have have voluntarily dismissed the company from the case, and hence that provides a bit of a relief for Dr. Reddy's. Hence, the stock is trading a bit higher. Back to you.
Right, from pharmaceutical to chemicals, a Nirmal Bang report indicates that the chemical sector's M&A transaction value between January to September has actually been around $3 trillion, just under that actually. Sonal Bhutra joins in with the details of all the M&A activity in the chemical space.
In terms of numbers and what it means for the future transactions that some of the players are planning to undertake. So as per the data, M&A transaction value has declined to around under $3 trillion versus $3.7 trillion. This is on a YOY basis. Out of this, healthcare and pharma had an 11.4% share, which is around $350 billion in terms of value, and oil and gas at 8.9% share, which is around $273.3 billion in terms of value. Now, there have been large deals. Large deals mean something above $5 billion. They were around 58 or at least 10% of the global M&A deals that we saw in this particular sector as well. The recent one, of course, is that we've been talking about Advent taking over Suven Pharma, which implied a business valuation of FY23 EV to sales of 9.5 times. Now, what does that mean for any other company which is looking at an acquisition? PI Industries is case in point. They have been telling us that they are looking at a pharma player, they are looking at an acquisition. So if we take this particular valuation as the parameter, this will pose a challenge for PI Industries because they may have to pay around 9,500 crores to 19,000 crore rupees for a 100% buyout of a similar asset. That is this one that is the kind of Suven Pharma. And this will mean that they will have to leverage their balance sheet as well. In fact, they have interestingly put out names of companies which are looking at an acquisition. There is UPL, PI Industries, Sumitomo, Coromandel International. All of them are looking for an M&A. Barring UPL, the rest of them are net cash as on FY22. Now, UPL is looking for smaller deals, say under 200 crore rupees each for both seeds and crop protection services segment. They've put out an interesting table as well, where UPL is looking at seeds and services as their possible M&A interest. They have a net debt of 18,900 crore rupees. PI Industries, which is net cash right now, is looking at CDMO and API. This is something that they have told us. Sumitomo is also net cash of around 435 crore rupees. They are looking at crop protection businesses or services. And Coromandel also, which is net cash to the tune of 3,300 crore rupees, is also looking at crop protection business for acquisition.
All right, interesting data there. So maybe a lot of companies will have to shell out a little more basis the latest deal that happened between Suven and Advent. With that, we'll slip into a short break and come back, talk about all the other headlines that we're tracking today. Welcome back. Still with us here on Markets Today. A dramatic recovery is what we saw in the last hour of trade, the penultimate trading session of calendar year 2022. With that, we'll talk about all the other headlines that we're tracking today. Credit growth won't be impacted by rising interest rates given strong demand and perhaps a likely peaking of inflation. That's the word coming in from the largest banker of the nation. SBI Chairman Dinesh Kumar Khara spoke to CNBC-TV18 today and said that the comeback of contact services post-COVID will be a big driver.
So what we have witnessed in the current year in terms of the improvement in the quality of the bank books, I expect that the same trend should be continued in the coming year too. The reasons are very clear because the kind of growth which we have seen is essentially riding on the growth of the economy which we have registered. When the rest of the globe is looking quite dull, perhaps India is a shining star. I think my expectation is last quarter, of course, we saw a very healthy loan growth, which is to the extent of over 20-21%. But going forward, it will probably taper down a bit. But I still expect that 15 to 17% is something which should be a reality. When it comes to chunky recoveries, perhaps may not be there because all those low-hanging fruits have already been plucked. But at the same time, there's a definite improvement in the ecosystem as far as the recoveries are concerned. But still, because of these enabling environment, it would be possible to affect recoveries there also. So I would say that in terms of quantum, it may not be as high, but still we would see some kind of recoveries coming in with the help of OTS, etc. And I think that will it will be some kind of pace of improvement may not be as high as we saw last year, but still I would say that there would be some incremental improvement as far as the asset quality is concerned.
All right, let's talk about the other headline, which is Shriram Finance. The stock slipped in today's trading session by almost 6%. In fact, at one point was down almost in double digits as well. 17 crore new shares were issued into the demat accounts of shareholders. This as a result of the merger of the group companies. So that caused a bit of an excess supply situation in the market. Vivek joins in with the details of that one. Vivek.
So Shriram Finance clearly taking it on the chin today. Now, what's actually happened is that yesterday the shares or the shareholders of Shriram City Union Finance actually got the shares into their demat account. So almost 17 crore new securities are available for transactions from today. And on the account of this, significant supply that's been added to the stock, you're seeing some amount of supply pressure or supply overhang. Now remember, today cash as well as futures volumes are very, very high, and we also understand from analysts as well as some of the dealer sources that there is significant amount of selling pressure also being seen from arbitrage funds who are playing for that particular event. In addition to this particular development, what we understand is that two of the larger shareholders, both Piramal Enterprises that owns almost 8.34% stake in the company, and also TPG India that holds a little over 2.5% stake in the company. In the past, they have indicated their desire to cash out or to sell their stake from the Shriram Group, and analysts believe that this now acts as an overhang for this merged entity. So overall, a lot of selling pressure, and till the time some of the clarity emerges on some of these events, you could see some pressure continuing.
Take that point. Thanks a lot for that, Vivek. Spandana Spurti, let's stick with the financial space itself. Ended about 2% higher after selling stressed loans worth nearly 320 odd crore rupees to an asset reconstruction company. Abhishek Kothari joins in.
Well, MFI continue to sell their stressed loans to ARC, we have seen in the recent past. So, Spandana Spurti has also sold some of its stressed assets to an ARC worth about 323 crores. So, for this, they have received about rupees 95 crore on an upfront basis. This is being done under Swiss challenge method, and if you take a look, this is one of the best rates that they have got amongst peers as well, who have recently sold their stressed portfolio to ARCs. So Jana Small Finance Bank had sold their stress to ARC. They received about 2.5% in August 2022. Recently, we had Bandhan's news of selling stressed pool to ARC. They received about 9% of the loans. And Spandana Spurti, on the other hand, has received about 29.5% in terms of the pools that they have sold on. So one of the good rates that they have got, and that is why the stock is seeing a massive gain in trade today. Back to you.
Abhishek, thanks a lot for that. Bharti Airtel was the other stock which saw a big rally from the lows, almost 8%, and that's big for an index stock on the back of news that the company is looking to list their payments bank. The stock, while on an absolute basis, closed with gains of 2%. There you see from the lows of 760, it moved all the way up to 820 odd rupees. Reema Tendulkar joins in with more details on that one. Reema.
Thanks so much for that. So as you pointed out, what we've learned is that Bharti Airtel is looking to list the payments bank. As of now, no details known about the timeline, but we're here to quickly tell you a little bit more about Airtel Payments Bank, which is currently housed in Bharti Airtel. Now, this is a payment platform, so very similar to your Paytm as well as Fino Payments. The services they provide are savings and current account, insurance, doorstep banking, payments, debit cards, etc. Airtel has about a 70% stake in Airtel Payments Bank, and one of the big benefits that Airtel Payments Bank offers to Bharti Airtel is that it helps reduce the churn for its subscribers. But where Airtel Payments Bank scores over its peers, as I said, its peers include the likes of Paytm as well as Fino Payments Bank, is that Airtel Payments Bank is the only profitable fintech in the industry. And they also have access to Bharti Airtel's unique users across their digital assets. So as I said, it's the only profitable fintech in the industry. So a quick word about their financials. Annual revenue run rate is now roughly 1,200 crore rupees. The EBITDA margins as of the Q2 quarter, September ending, was 4.7%. It is profitable. They have more than 50 million monthly transacting users. Monthly transacting users are basically users who've at least made one successful transaction in the month. If I have to compare it with Paytm, because that's the other listed entity over here, and it's a well-known one. Now, Paytm is much bigger than Airtel Payments Bank. Its size is close to 6 to 7 times that of Airtel Payments Bank. So whether you look at the gross merchandise value GMV or you look at the revenue run rate, the quarterly revenue run rate for Paytm is more than 2,000 crore, while for Airtel Payments Bank is roughly a little more than 300 crore rupees. But where Airtel Payments Bank scores over its peers is the profitability. Look at Paytm Bank's loss in the quarter gone by, in the September ending. It had a loss of more than 570 crore. In comparison, Airtel Payments Bank is profitable. It's been seeing a healthy double-digit growth, 50 million monthly transacting users for Airtel Payments Bank, and now it appears that Bharti Airtel would like to monetize it as well. Back to you.
All right, and finally, because of the penultimate day of 2022, let's end on something sweet. Sugar sector, that was one of the sectors of this year with a mega structural change, and the prospects looking bright for the sector even in the next year. So why is it in a sweet spot, and what should investors watch out for in 2023? Surabhi is standing by with all the details.
Sugar industry is at the cusp of mega transformation. The government's initiatives to tie this sector with the need for clean energy is driving a structural change. Additionally, over the last few years, the government's initiatives have changed the fundamentals of the industry. The OMCs have issued multi-year ethanol tenders, which gives the mills long-term visibility. The government also increased the ethanol price in line with the FRP prices, which also increases the ethanol realization. Additionally, to encourage new capex in the distilleries, government gives loans at lower interest rates. In fact, this year itself, 228 ethanol projects have got loans of more than 18,500 crores. Sugar sector is primed for sustainable and green growth. The ethanol market is pegged to be valued at $16.5 billion by 2030. To meet all the increased demand, the ethanol capacity needs to grow 3 times by 2030. Ethanol production is expected to increase to 1,500 crore litres by 2026. In this year itself, the ethanol capacity has increased to 947 crore litres from 680 crore litres in the previous year. Some of the listed companies are doubling their capacity in the next 2 years with a capex of close to 1,300 crores. Now the question, why ethanol diversion makes sense? Higher demand for ethanol and better realizations have ensured that the excess gain is diverted towards more profitable products. This makes more sense as well, as it yields better returns. Increasing proportion of B-heavy ethanol, which is the co-product of sugarcane, have better ROEs as well. The ROE on new ethanol plants with B-heavy molasses is much higher at 146% versus direct route where it's only 47%. Also, the payback period is only 2 years versus 5 years. In the last 5 years, the revenues from distillery segment has grown anywhere between 25 to 60%, and the profitability has seen similar kind of growth. In the next 2 years as well, the revenue is expected to grow at 15% CAGR and the profitability to grow in the range of 25 to 30%. With this, distillery will contribute close to 50% of the profits by FY25 versus 35% currently and just 9% in FY17. Diversion into ethanol segment also helps companies deleverage their balance sheet. In the last couple of years, the combined net debt of the sugar companies have increased by just 100 crores despite a capex of 1340 crores. Higher profitability also had a positive impact on the company's cash flow. The net debt to EBITDA is likely to see a significant improvements from its current levels of 1.3 times in the next 2 years. The sugar sector appears to be powering forward with sustainable growth, which would eventually re-rate the sector.
Eventually re-rate the sector indeed, and we saw today as well a big move on all these sugar stocks. What was earlier cyclical is perhaps now getting structural. That's the view coming in on the sugar stocks. Thank you so much for that, Surabhi. In fact, on that note, we'll take your leave, wrap up on this edition of Markets Today. Thank you for watching, but stay tuned to CNBC TV 18.